by offering what they call interest rate. So when interest rates are increased, in this case, when this inflation is going up, interest rate is going this way. When inflation is going down, interest rate is going up. When inflation is going up, interest rate is going down. When inflation is going down, interest rate is going up. And vice versa. So this has to do with the correlation of interest rate and inflation. So the diagram I just drew here is the correlation of interest rate and inflation. The banks, they try as much as possible to encourage savings. They try as much as possible to encourage savings, but the point there is that when inflation is too high, you don't even have enough money to save, except you have multiple sources of income. You understand? And you run a multi-million, multi-billion, multi-trillion business. So currently, the ECB, sorry, the Federal Reserve wants to increase interest rates by 25 base points. Whenever I get 25 base points, this is what it means. 25 base points means 0.25%. That's what it means. When they want to hike interest rate by 50 base points, it means that they want to increase the current interest rate by 0.50%. And when interest rate is increased, inflation is expected to reduce. So whenever there is a 0.50% hike of interest rate, it is a massive hike. It is a massive hike on interest rate. It's a very massive hike on interest rate. So one thing I want you guys to understand is that this is the data of the past interest rate hike for the bank, Federal Reserve Bank. It is loading. Okay, that's loaded up. So I will show you guys a little example and research I did. This particular date was last month. Let me bring this down. Yeah, this was on 14th June. This particular is for 14th June. And you can see here, the interest rate was 5.25%, and it was left at 5.25%. The last month of May, interest rate was at this was May. Interest rate was at 5%, but it was increased to 5.25%. And whenever this interest rate is increased, it makes the dollar stronger. Whenever interest rate is decreased, it makes the dollar weaker. Or whenever interest rate is left stable, it makes the dollar weaker. So let us check on the 14th of 6th, 2023. What happened? 14th of 6th, 2023. We're going to TradingView. This is a paid version of TradingView, so it can take us further backwards. TradingView, they use their platform to make some money. So if you want to get that as well, I think you need to upgrade your account. So let's go to June. We're in July 14th. And this data is always released 7 p.m. West African time. Okay. Okay, so this is it. This was the last. What did I do? Well, let me go to that particular day again. This was Wednesday, June 14, 2023. Let's confirm that this is 14th 06, 2023. Don't worry about this time. Then it was a positive for the dollar. The forecast was 5.25 and the actual was 5.25. No change. It was a positive, it was just, and the market dropped. No change. So let's go further down. On the 3rd of May 2023. Let's check the 3rd of May 2023. I know most of you don't know that TradingView had this too, but since you guys are figuring it out, congratulations to you. I think I cannot go past. This is gold. So I think, okay, yes, let me change time frame. Sorry about that. Let me change time frame. If I change time frame, we can go further back because the candles, they do that based on candles. Let's try it again. Okay, so over here is on Wednesday, 3rd of May 2023. What happened on that day? On that day, the interest rate was increased from 5.5% to 5.25%. On that day, interest rate was increased from 5% to 5.25%. You understand? 5% to 5.25%. And what happened to gold? It bought off. But most times I realize that this interest rate, they come with spikes. So at least when the news is out, we might place a limit order. We're not going to place a market order and put a stop loss. We might place a limit order or a stop order, which means buy stop or sell stop. Yes, we either place a buy stop or sell stop, which means the market goes up, it's taking us for our buys. If it goes down, it's taking us for our sells. And we place it at a very conducive environment because I noticed that interest rate news always has a spike. The last one we checked, let's confirm that. The last one we checked, that was it came to a spike. It sold off, but came back up for re-entry. Back to the point of taking off, and then it sold off very well. So the same thing now we saw on May 3rd. It had a spike, but interest rate was increased from 5% to 5.25%, which is making the dollar strong because if you read the fundamentals very well, it says a reading that is stronger than forecast is generally supportive, bullish for the dollar. While a weaker than forecast reading is generally negative, bearish for the dollar. And I realized that inflation most times, or in interest rate most times, goes in one direction. See it over here now. This is for the past 5 years. For the past 5 years, in 2020, we were in lockdown. Inflation, interest rate was never increased. It was left at 0.25%. It was never changed. But as soon as we left from lockdown, it has been increased from 0.25 to 0.5 to 1%. This was a massive hike by 50 base points. This is 75 base points. So, and it kept going up and going up and going up and going up till today. We are about 5.25% interest rate on money that is being loaned from banks. Because if you reduce the supply of money in the economy, they think, yeah, it controls inflation. So, let's check out more data. Why we're checking out this data is so whenever the current data we're expecting to come out plays out, how do we react? Yeah, the forex market is reactive, not predictive. You need to react a certain way. So we have checked when the data was 5.25% and it was left at 5.25% 14th of last month. The market sold off. Then now the market, the data was at 5.25% forecast, and it was exactly 5.25% actual, and the market bought. But before the market bought, the previous data was 5%, and the market bought. You see? So now currently we have 5.25%. and the forecast is 5.50%. If this 5.50% turns out to be exactly 5.50%, I think that the exact actions or reactions that happen during this time would also occur during this time. And the next announcement that is meant to happen on the 20th of September, it could be a 5.5% hike. And the same reaction that happened for this will happen for that 20th. So we're just using data points to know how the market reacted. And if in future time, if we have the same similar data point, how we are meant to react. Okay, let us check this one now that we have 4.75%, and the forecast was 5.00%, and the actual was 5.00%. The same data point we have here. Let's see what happened on the 22nd of March, 2023. Let's check it out. I'm checking out gold. 22nd of March. Am I correct? Is that? Yeah, 22nd of March, 2023. I think the time is still the same. Yeah, the time is still the same. 22nd. Boom. This is 22nd of March. What happened? It increased. The market went up. So now we have a roadmap. It went up. The same data point. It's more like common sense. You grab. It's more like common sense. So since the previous was 4.75% and it was hiked by 25 base points, which made it to 5%, and the forecast was 5% and the actual turned out to be 5%, the market bought. Then the next month, no, I think that was 2 months later, the forecast was 5.25%, but the previous was 5%, and the forecast turned out to be actual. The market was bought. But when the previous was 5.25% and the forecast was 5.25% and the actual was 5.25%, what happened? The market sold. So currently, the same data point we have here is similar to this, and is similar to this. You grab. So if the actual turns out to be 5.5%, ladies and gentlemen, I'm buying. Is primarily common sense. If the actual turns out to be 5% interest rate in the United States, I'm buying. I'm buying risky assets. I'm buying gold. I'm buying EURUSD. I'm buying GBP USD. I'm buying AUD USD. Risky assets. I'm not buying safe havens. And based on what I see here, EURUSD still came back to my order block. So we have about the last 15 minutes, brothers. So get your accounts ready, apply proper risk management. I think I've done due diligence to break down for you what inflation is, what interest rate is, and how you are meant to invest your money in the market whenever a particular interest rate data point is read. So apply proper risk management, invest what you can afford to lose. Invest what you can afford to lose. I like what I see here. So it's 20 pips. I think I can. Because of that spike, I think I'll just make it about 15 pips. 15 pips. 15 pips. That's my interest. 15 pips. And leave a long is to be a long trade. Ride it for the rest of the week. One thing I love about this is that whenever it comes out, you can ride that data point for the rest of the week. It just keeps going. Even the weekend flows can come out to the next week. So this GBP USD, let's see. I only have this is my return to origin. It's not there, but I'm comfortable with EURUSD. Then AUD USD. AUD is the weakest currency today. Let's take a look. AUD is the weakest. So I'm not looking at that. I might be looking at Euro USD because Euro is stronger than the dollar over here. Then NZD USD, then USD JPY for the sell, and USD CHF for the sell. For Euro USD and NZD USD for the buys. So anything aside from that, I'm not interested. So I just have to untick this. I didn't see card. What? Okay, card is close to GBP, so I'm not interested. So this is what I think I'm interested in. I like what I see. I like where you are. I like where you are. This effect though, don't be moved. This effect, the lines I just drew is just more of what I see here. Let's expect the data points to be out. The data points will be out in less than 10 minutes time, and good. I like what I see. I like what I see. Apply proper risk management. Apply proper risk management. Yeah, the forex market is a highly volatile market. Apply proper risk management for gold. I might just slide on gold, bro. I might slide on it. So I can just focus on you, sell. If I see a better entry, and you too, you're an ascending wedge and it broke out. And ascending wedge strategy. Principles of trading a wedge strategy. After you enter at the breakout, and you place your stop loss above. Okay. Although institutions are not buying CHF, but currently you can slide on that. This could be just a one-time trade. Then we're aiming for this return to origin. Probably, I think that's where they are targeting before they start getting the big buy-off. Overall, I'm long on USD CHF. Like, if it comes to a monthly, next month candle, I'm long on it. Then what I see here, okay, good. And let's add a little bit. Search. We'll apply proper risk management. We have about 9 minutes to go. 9 minutes to go. 9 minutes to go. 9 minutes to go. Remember, there is always a spike. There is always a spike. If you want to be patient and wait for the news data to come out, it's up to you. 1:3 is not bad. 1:3. It's not bad. So meanwhile, as you wait for this to come out, if this is your first time to be on this call, you can learn how to trade the financial market on our website, www.10digitallane.com, where we teach you the right information that will help you to become a profitable trader. And 10 Digital Lane mainly, we just educate everyone who has a knowledge gap in financial markets, real estate, wealth building, accumulating assets, and so on and so forth, to learn the specific knowledge that will give responsibility and control in these sectors and industries and be able to make money from it. So that's what we do. We empower people on that area of life. And currently, we teach people how to trade the financial market as a passive income source. And you can be able to make a lot of money and even stop your job. Consistent profits can make you just say, this salary, I don't want again. Or if you don't understand Igbo, sorry for using that language. I think a lot of current countries are here. So what I meant was that probably you could just in and stop your 9-to-5 job. That's what I mean. So when it comes to our platform, we offer a lot of value. We offer you VIP group chats. We offer you signals. We offer you live trading sessions. We offer you a certificate when you're done with the lessons, and we know that you're now fully ready to handle the markets. We're going to give you funding. This funding is for a limited time. So if you can grab a package today, all you need to do, 3 steps. take a package, a 1 month, 3 months, 6 months, or 1 year package, you can see the price is there. The higher, the better for you, because the more you stay with us, the more values we are going to accumulate in future, you're going to get as well. We'll be giving you access to our tools. Some of our tools are the trading softwares we use for trading, and you can be able to use them to make some good money in the market. You can be able to use them to make some good money in the market. So I don't know what you're waiting for. This could be the choice that you needed to make a very big change in your life. So grab your phone, chat me up, and let's get this started. So I hope you guys apply proper risk management. Apply proper risk management. Apply proper risk management. I think I should even expand this a bit because of all this spike of a thing. But we have about how many minutes to go? I'm using investing.com. We have 5 minutes. One tip you guys will take home today is that on investing.com, the news feeds comes out 10 seconds earlier than my FX book, and comes out earlier than Forex Factory. The new news feed. If you're able to get the news feed faster, you can be able to make a rapid choice instantly. So that's a tip for you guys for being on this call. So those of you that are so buying risky assets, but if the data remains 5.25%, we're selling. But if it turns out to be 5.50%, we're buying. But if it turns out to be 5.25%, we're selling. So apply proper risk management based on history. When it is increased, it always buys. Based on history, when it increases, always buy. So let's see what goes down. Apply proper risk management. Apply proper risk management. You better apply proper risk management. Apply proper risk management. Let me get 5. Don't forget the spikes. The spikes always come in. The spikes always come in. Remember, if the news is negative, you have the chance to still close and reverse. The strategy, close and reverse. So let's see how it goes in a minute's time. Touchdown in a minute's time. In 5 base points. 25 base points. Buy, guys, buy. Told you guys. Don't worry, if you've not entered, you still have opportunity to re-enter. Don't worry, don't worry. Don't take a wrong position. Make your buys, make your buys. Make your buys. The market is going to go in our direction. Make your buys. Bye, guys. I'm buying EURUSD. I'm buying EURUSD. It's pumping like mad. Pumping like mad. Well, thank you so much for joining us to this end. I think you guys learned not just one, not just two, not just three tricks, but multiple tricks. So before we round up, do you have any questions? Any questions before we round up? Before we round up, come on, guys. Do you have any questions? Any questions? Any questions? You can raise your hands. If you have any questions, raise your hands. I'll unmute you. I'll unmute you immediately. Any questions? I will unmute you immediately. Damn, gold is whipsawing. Gold went sell and went buy. Thank God we stayed at what is it called? EURUSD. So we won't get our bots kicked. Apply proper risk management. Set and forget. No questions. Any questions? Okay, I have a question for you guys. These are for my students. I can see a lot of you guys here. For my students, what do you think about our current products, like our education, our services, the signals, the rise and grind, the book, because we gave you guys a test book you guys read, our signals so far, our group, our social media handles. Like, what do you think? What do you think about it? Do you think you're satisfied? Do you think you want more? What's that particular statement you make whenever I send a signal? Or what that particular feeling you have whenever I post on these social media platforms? Like, tell me, is there something that you feel inside that needs to be done? You're free to say. Please, I need you guys to share with me. Very, very important. I'm waiting. Oh, I'm waiting, guys. I'm waiting. One person, one person. I just need one person. We have less than 5 minutes to go. Come on, guys. You guys have something to say. Spill it out. No one is perfect, though.
Hello, good evening.
Good evening, Francis. Thank you.
For my own, I have not been comfortable with most of these cross pairs.
Okay.
Especially when you send the signal. It's not that there's anything wrong with it, but I'm not usually comfortable with it. I'm usually comfortable with more. The cross pairs I'm usually comfortable with is if it's JPY cross pairs.
Yes.
That is just my own view. Yes.
Okay, that is noted. JPY cross pairs. Okay, okay. So that means I have to focus more on JPY cross pairs. I shouldn't be sending any kind cross pairs. Or but you're good. But you're good
You
with
can send.
measures.
You can.
You're good with
Yes,
measures.
I'm good. Yes, I'm good with major pairs. You can send any cross pairs. I don't know for other people, but for me, I'm more comfortable with any cross pairs like that because
Yeah,
I've been looking at most of the charts. The charts are not usually comfortable. You
yeah,
understand?
yeah.
Yeah, that is the thing.
Okay. Noted.
Then and also something else is this trade locker that's promo I got.
Yes,
I'm
yes.
having, I'm having issue with that thing. I'm having issues with it.
With the app.
Even yes,
Okay, what about it?
it's sort of started me network issue. Try again, log
Yes,
some sort of issues, and it seems like their fees, their spread is high.
yes.
Even this trade now you called now, I could not take it. I'm trying to log into the account now. I'm having serious issues with that thing.
Okay, okay, okay. The trade locker. What he's talking about is our community. We got opportunity to get funded by a prop firm. So I'll do a research on that. Francis, thank you for sharing. Thank you for sharing. Thank you for sharing. So your main issue is the signal, the pairs I select to send the signals, one, and secondly is mainly that's it. And secondly is the trade locker. So I'll do my research, I'll do my due diligence and get back to you on that. I'll do my due diligence and get back to you on that. Any other requests? Any other request? Any other request? Okay, okay.
Yes, how's it, brother?
Okay, good day, sir.
How's it? That's Euro USD, right?
Yes, sir.
When Powell speaks now at half past, in the next few minutes he's gonna speak Powell now in the next 20 minutes, right?
Yes.
His speech, won't it affect your trade?
His speech?
Won't it affect your trade? Because if he says something wrong, the dollar might get a bit weak.
The dollar might get weak
You
or the
see.
dollar might get strong.
Yeah, it depends what he says on the FOMC press conference.
I think the speech is literally going to bring in more liquidity into the market. We have less than a minute. This could end anytime soon. But I'll watch out for the speech and I'll give you guys updates on that.
Okay.
And just stay attentive on the Telegram. Yeah. Okay.
Okay, no problem.
Have a wonderful evening,
Okay.
everyone.
Cheers.
Stay blessed.
Cheers, bye.